Hi, everyone. This is Jason Bjork of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. She is the CEO and Chief Strategist for Quill Intelligence. Also, she published a very good book a couple years ago, Fed Up, an insider's take on why the Federal Reserve is bad for America. Danielle DiMartino Booth, thank you for joining me again.
It's great to be here today, Jason. How are you doing?
Pretty good, all things considered. I mean, I kind of was fairly prepared for all this a few months ago. So I kind of, because I was getting reports from my friend trapped in Wuhan that I've known for over a year. So I knew things were way worse than the Chinese government was claiming.
Yeah, it's interesting. there have been reports that have shown that the first Wuhan case was diagnosed on December the 1st, which means that obviously you don't just up and get diagnosed with coronavirus. It has to have existed before that. So pretty scary stuff.
Yeah, this is really infectious, but a lot of people who are infected don't have symptoms, but it's spreading. But I'd rather talk about the economic impacts because that's your specialty. That's my specialty. I'm not a virologist. I'm not pretending to be an armchair virologist like some of the people on financial Twitter. So,
of course.
So I want to get your opinion on all the craziness that's happened. I have contacts that are higher ups in rating agencies too, and also bond portfolio managers. Was what happened in the last 4 or 5 weeks, in your opinion, worse than what happened in 2008?
Well, I do think it was worse in the sense that we've seen time compressed. We've seen everything happening in the opposite of slow motion. This is super fast motion that we're watching things unfold. And the difference between now and a few years back, a decade ago, 15 years ago, is that there's a lot more leverage that's built up in the system. So there's a lot more that can go wrong.
Because when I see what the Fed has done, all the alphabet soup bailout programs, they rolled it out. You said compressed. It seems they rolled everything out a lot faster. They had a lot of the same bailout programs that took them so long in 2008 to roll out. A lot of them seemed prepackaged and fairly ready to go. And then there was 2 currency swap PR releases in a week. I was shocked at that. And then the global repo that they set up so other countries don't dump their treasuries for the dollars.
It is absolutely extraordinary to see everything the Fed has done from the last crisis and then tack on all of the new things that they're doing, which are much more, they're much closer to the line of being illegal.
So I saw you tweet about that. You talked about special purpose vehicles. So the actual law for the Federal Reserve Act says they can't buy corporate bonds, they can't buy stocks. So talk about this special purpose vehicle and what they created. It's kind of what, a dummy corporation is that what a special purpose vehicle is?
It seems like it was forever ago, but if you think about Enron and off-balance sheet vehicles, that's basically what this is. The Federal Reserve Act expressly prohibits the Fed from buying any security that is not backed by the full faith of the U.S. government. And so that limits it legally to treasuries and mortgage-backed securities, which we saw during the last crisis. The last crisis, it was debated internally when I was at the Fed and determined that the Fed could not and should not buy corporate bonds, to take but one example. So the only way that you can skirt that law, to get around the law, is to have Treasury hold the securities on its balance sheet such that they're not technically at the Fed, which violates the Federal Reserve Act. So this would be, if you will, as you would hear kind of in a crime law show like Law and Order, it's that the Fed is getting off on a technicality. And there's a good chance that when the dust settles after, God willing, this virus passes as quickly as possible, there's a good chance that this will be challenged for its constitutionality, because now that the securities are housed at Treasury, we have effectively nationalized the corporate bond market, including high yield debt. And in theory, if you want to take the argument to the extreme, as my good friend Jim Bianco has, the President of the United States is in charge of this massive facility. So we've gone to nationalizing financial markets because they're under the control of the U.S. government, to potentially violating checks and balances, which could be questioned on a constitutional level.
Wow. So I heard you in another interview bring up municipal bonds, and the Fed was actually discussing buying them in 2008 at the height of the crisis, but they thought that it was kind of absurd, that it would devalue the dollar. They were worried about inflationary expectations, potentially people dropping their dollars. But here we are, because of the global economy is not functioning normally. People are not consuming. They're not out at restaurants and shops and bars. State and local governments are not getting those normal tax revenues that they planned in their projections. So the Fed, I guess, feels it has to step in here because of the hole in the tax revenue everyone was counting on.
That is certainly the case. But again, this is all very iffy territory in terms of what the Fed is legally able to do. But we know for a fact that New York and Illinois, that their unemployment insurance funds were insolvent almost overnight because they were overwhelmed with the sheer number of unemployment insurance applicants, and there were not adequate funds in those states' coffers to be prepared for such a thing. So, and that is going to be something that spreads. We're probably going to see similar situations crop up in other states as well. So I can certainly see where the federal government would have a place to step in here. I have a much harder time with the Federal Reserve playing a role here.
We have 16 million adult Americans now filing jobless claims in just the last 3 weeks. I think we're far from done here. Some of these, I was hearing anecdotal stories from podcast listeners about how they initially they were trying to file for over a week and they had no success. There was phone calls that were not being returned. The websites were crashing for some of these states for over a week, every single day. So I think we're far from done. I've been seeing a lot of people post, who I follow on Twitter, regular people not in the financial industry, who have been posting that they just got fired. So I think there's a lag time. I think it's going to be at least a couple weeks, maybe a month, before we get a true sense of what the real unemployment rate is.
I think you're absolutely correct. In fact, I just tweeted out some statistics that show that the most populous states in the nation, that would be New York, California, Florida, Texas, they're still very far behind the states such as Pennsylvania, for example, where 12 or 13% of its labor force has applied for unemployment insurance. And the other largest states, such as Texas and New York and California and Florida, they're only closer to 3-4% of their workforces having applied for unemployment insurance, which means that there are massive backlogs in these huge states that have to come through the system. So we've not seen the worst of what's to come. I mean, right now you've got about 1 in 10 Americans who have applied for unemployment insurance. And, I think that number could conceivably double here in the weeks to come.
I want to get your opinion on the dollar and the dollar index now. So if you were to tell me that the Fed would issue all these guarantees and press releases for many, many trillions of dollars, and the dollar would actually go on a rip your face off rally up to 103 before it started to correct. And now here we are, it seems almost every day, Danielle, that there's a new guarantee by the Fed or a new type of bailout program with those special purpose vehicles with the legality in question, like you said. And yet the dollar index is still above 99 on Friday, April 10th, when we're recording this interview. So why do you think that's happening? And do you think President Trump, the Treasury, the Federal Reserve are worried and upset that the dollar is still, on a relative basis to these other currencies, strong?
Well, it's certainly distressing for our manufacturers. That being said, our manufacturers aren't selling very much at the moment. Manufacturers worldwide are not selling very much at the moment, unless it's personal protection equipment. But yes, the strong dollar is certainly something that has got to be irritating the government, those at the Fed. But again, you have to consider that other countries' finances are in much worse shape. If you think about some of the places where the coronavirus has hurt the most, for example, Italy, whose finances are in a tatter. So you see other currencies continue on a fundamental level to weaken. And there's also a tremendous need for dollars worldwide right now.
Yeah, and the Fed was trying to prevent these other countries from selling their treasuries to raise cash for those dollars. That's why they set up the global repo.
Yes, that's true. And we've seen that that's been very effective in addressing that backlog. But again, one has to wonder what the world is going to look like if and when the Fed ever tries to truly exit. We've seen what happened with quantitative tightening, even though it seems like a million years ago that it took place, and the Fed's failed attempt to normalize interest rates. You almost have to sit and wonder, will this ever be possible? And the Fed is certainly they're certainly committed to keeping interest rates lower for even longer than they did. But at some point with all of this money printing, there is the risk, the growing risk that we could initially have deflation, which is certainly what we've seen. We've seen a crash in the consumer price index, fresh data that came out showing us that. But there is the distinct possibility that we could have rising inflation at some point if the printing press just continues to roll on 24/7.
In my opinion, one of the major reasons why there is a dollar shortage is because global trade, like you said, is not functioning normally. So all the goods and services, American tourists are not traveling, and that's why these other foreign companies are not earning their dollars. So how, in your opinion, how badly broken right now is the global supply chain, and how long do you think it could take to fix?
It's so hard to say. It's so hard to predict because we've seen fresh data out of South Korea that shows that people can become reinfected with the coronavirus. We've seen a resumption of an increase in the beginning of a second wave in China. So it is absolutely, you're not a virologist, I'm not an epidemiologist, so neither of us can say how long this disruption is going to last.
So that uncertainty means it's almost with the central bank balance sheets, they're hockey sticks. The Federal Reserve balance sheet, official balance sheet, is starting to look almost like a hockey stick right now. And that's kind of lined up in correlation with the amount of total people infected in the US and globally, and then also, the amount of deaths, it seems, and then also the jobless rate. So all those graphs, I line them up, they're all starting to look like hockey sticks with the jobless, the infected, the deaths, and the central bank balance sheets.
They are, and I don't know that we necessarily see any end in sight. The Fed has been reducing the amount of treasuries that it purchases, so we might see a slight slowing in the Federal Reserve's actual balance sheet. But once again, the real action is off the Fed's balance sheet right now, which is why it seems that there's this convenient emergency measures every Thursday morning when we see the fresh jobless claims data hit.
So your book was fed up about the Federal Reserve, why it's bad for the US. Do you think it's right that hedge funds and private equity should get bailouts?
No, absolutely not. I think that it raises the specter of moral hazard on steroids to indicate to investors that they can speculate as much as they want and that there will never be any consequences. Risk should equal return, and that is certainly not what is being reflected, and it's not the message that's being communicated. Every day I find a reason to get a little bit more irritated with Wall Street, and hearing that private equity firms were lobbying Congress for relief, well, that was just yet another step off the reservation in just in terms of decency. And I don't know, it boggles the mind. Clearly, it leaves me speechless.
Well, I think you're being polite, Danielle. I think the people on Main Street here in the US, I'm just hearing stories from friends who own small businesses. The banks are giving them the runaround. The SBA is clearly overwhelmed. And what the Congress's coronavirus bailout, what it seems to me at least, people are going to get $1,200 checks, maybe a little bit more, a little bit less, depending upon how much they made, between $70,000 and $100,000. And then that'll be phased out. But some of these checks are not going to be coming for over a month, sometimes many months. And yet that seems like scraps. So you have the bailouts. I don't know if we're ever going to know the exact number that some of these hedge funds with the risk parity trade and the basis trade that blew up, like long-term capital management, and then private equity. And the other thing that worries me is this slush fund, this $500 billion leverage buyout slush fund that these large corporations are going to get. So clearly there's good small and medium-sized businesses. Before the coronavirus, they were doing pretty well, and these large corporations are going to get an extra $500 billion to go and buy these distressed assets for pennies on the dollar. If I was a small business owner running a business like that got bought out and my employees got fired and they bought my assets that I spent my whole adult life building, I would be really pissed.
Oh, absolutely. It is, you're watching the Fed announce that it's going to buy junk bonds, and you see this massive rally in the stock market, and you say to yourself, okay, now I see what the Fed has done for investors, but what on earth are they doing for small businesses across America? There's been a lot of lip service, but as far as I can tell, there's no immediate relief coming because of how convoluted and mismanaged the rollout of the emergency funding was to the small business community.
Yeah, I completely agree. Some of the stories I've heard at some of the banks, I can't remember if it's Bank of America or another one of the banks, but they're saying that you have to have a credit card with the bank, you have to have a business, a checking account or a business account and a business credit line there before they'll give you an SBA loan. It's just ridiculous.
It is, and I think that the certain banks, such as Bank of America, have said that once they exhaust their pool of people applying for these loans, that they'll take applications from people who don't bank with them. But again, none of this was clear before the rollout of this program. And last check, Americans haven't even received that initial stimulus check. I believe there's still another week to go.
Yeah, probably the end of the month, early May, before some people start getting checks. It's extremely frustrating, but here we are. Congress is already talking about another round. I'm worried about the fraud too. So not only is this thing delayed, like you said, I'm worried about the fraud. So there's Social Security fraud, Medicare fraud, Medicaid fraud. There's going to be a lot of fraud because there's not enough SBA employees. And I'm not a fan of big government, but I'm just acknowledging the reality of the situation that there's not enough SBA employees to investigate these businesses or maybe their shell companies making claims for the SBA loans. So there's going to be enormous amounts of waste and fraud there too. But with the SBA loans, Danielle, are we up now with the second round proposal? Is it 600 billion that they're seeing now with the second round of the SBA loans that they haven't even doled out the first round properly yet?
Well, from what I'm hearing, and again, this is very fluid and it's coming out of Congress, but from what I'm hearing, the Democrats voted down something as small as 250 billion because the Democrats wanted the 500 billion higher figure. I've not heard the 600 billion, but then, the news is extremely fluid and changes every few minutes.
Oh, I was just adding up the round one package, right? Which was what, 349 billion. And then the second proposal was for the second round was 250, I think. So it was a little under 600 billion. That's
Yes,
what I was just adding.
that is what the Democrats voted down, was they wanted a higher figure than that second round being 250.
Wow. Also, I heard Reuters ran an exclusive report in the last couple of weeks that the Democrats in Congress and the House, they want the Community Reinvestment Act pumped full of steroids again, and they're trying to incentivize the banks to do so.
Oh, goodness gracious.
The level of waste, fraud, corruption, and abuse, I'm right outside of DC, as you know, is going to be enormous from both political parties. You have all these congressmen running around from the Republicans in both houses, and then also a good amount of the Democrats. And, the main company name I've heard is Boeing. So that seems to be like the favorite bailout company that's going to get the best deal for now.
Well, I certainly see that. I have sympathy with, and I see the idea of airlines and airline makers being of national interest. I certainly do. That being said, it makes your blood boil to hear that 96% of airlines' cash flows, for example, went to share buybacks, and now they're getting bailed out again. So, and we know that Boeing has been a massive share buyback company as well. And, I hope that the politicians who are saying that they'll be penalized if they buy back their shares in the future stick to their guns, and that this isn't something that is also quietly set aside, brushed aside, and they're allowed to go back to the same habits that they had beforehand.
These are capital intensive, the airlines and Boeing, capital intensive, low margin businesses. They should have, when they were making free cash flow in better times, they should have been saving cash on the balance sheet for a rainy day fund, but that's not what happened at all.
No, it's not. And we're finding out very quickly. I saw something on Twitter earlier. There was a presentation made, and Josh Brown actually retweeted it, that 1 in 6 companies right now is basically insolvent. 1 in 6 companies is basically a zombie.
Yeah, I saw someone who's friends with David Tepper tweet something out a couple days ago saying that David Tepper, the hedge fund manager and owner of the Carolina Panthers, he doesn't understand why the stock market's rallying because all the companies he talks to are close to going broke. He thinks the unemployment rate's going over 20%. And, the real economy, the dislocation between the asset prices and the real economy, I don't think it's ever been larger.
It hasn't, and we really haven't seen the dislocation that I think we are going to see in the financial markets. The Fed is trying very hard to prevent risky asset prices from declining, and we've seen huge comebacks in investment grade bonds, in the stock market, in junk bonds. That's not going to take away from the fact that we're going to see defaults. And you could actually see some of the securities that the Fed is buying become insolvent, go away.
Oh, wow. So you think that this is probably still a bear market rally? Because it seems from a historical standpoint, when I was looking at stock market charts from prior events after the October 1929 crash and the 1970 stagflation, when the government intervened and there was massive amounts of currency and credit created, one would have thought that the stock market would have went automatically up, but that's not what happened in the previous stock market instances that are similar to this.
No, and again, you have to consider the timing of when the Federal Reserve is rolling these facilities out. Literally at the same exact moment that the jobless claims data hit on Thursday morning, they made this announcement. The futures were already down 200 points on the Dow Jones Industrials, for example, and turned around to close up 300 points on the day. So there's clearly going to be ramifications. I think that we are in a bear market rally right now. But that being said, it's amazing to see the power of the printing press right now, and the financial markets effectively applauding the nationalization of the financial markets, because in the end, this will make risk allocating capital nearly impossible in this kind of an environment, which is actually not good for banking.
So I know you've been warning people about the credit ratings downgrades that were coming, the problems in the corporate bond market, the junk bond market for a couple of years now. I've cited your work a lot on my YouTube channel and my podcast. So there was a 150 billion approximately in corporate bonds that were downgraded. Are we still going to have firms that are going to go bankrupt, or is the Fed, it seems, didn't the Fed set up a separate facility, one of these special purpose vehicles or one of these alphabet soup bailout programs, where they're even skipping through the primary dealers? And so the Fed is loaning directly to some of these large corporations that have balance sheet problems, that have too much debt, and that are facing credit ratings downgrades. Are they going to be like a secret bailout, a covert bailout, or they're actually going to be companies allowed to fail?
Well, that's a good question, because during the financial crisis, it was quantitative easing that made the global markets, that made the capital markets, that had the high yield bond market open back up for issuance. And the assumption that the Fed was going to come in and buy junk bonds towards the middle of the trading week made it to where companies such as Wynn Corporation, for example, that's got Las Vegas is closed at last check. They were able to float debt. So as long as zombie corporations can theoretically gain access to liquidity, they can remain the walking wounded. But I think that there are going to be some companies that just flat out go bankrupt, that have no revenues, that have no cash flow, and have to declare bankruptcy, which is, again, why I think that there's a risk that we see insolvencies go back to, in some form, the taxpayer.
Unbelievable. This is so crazy. Also, Larry Kudlow said about 3 weeks ago, I guess it was probably approved by President Trump and Steve Mnuchin. He said that the government is already looking at doing AIG type of deals where they make large equity investments into some of these large zombie companies. And then maybe when the stock market's higher in a few years, if there is a bear market rally and the stock market does go substantially higher than now, that they would sell the equity stakes, like how the government made up billions of dollars in profits off AIG, didn't it, from this scheme?
Well, actually, none of the interventions on the Fed's part were unprofitable in the end, if you will. Everything came roaring back. We were in a different environment at the time. We had mortgage modifications come in to ensure that millions of Americans did not lose their homes. So a lot of these mortgages were made whole back then. But again, what I'm talking about something completely different, because AIG is a viable entity to this day, obviously. I'm talking about companies that aren't able to be rescued going out of business.
I'm not as optimistic about the tourism, travel. I think it's going to take a while before sports, entertainment, before people start to have some confidence about maybe going back.
We will see. Let's put it that way.
So you've been also warning about commercial real estate now for a couple of years. Tom Barrack who is a billionaire real estate investor, friends with President Trump. He's been doing the interview circuit with CNBC and Bloomberg. He thinks that by the end of the month, there's going to be unbelievable amounts of defaults for residential real estate, commercial real estate. What's your opinion on this?
Well, we don't know the extent. We have to remember that the Federal Reserve's stress tests, and few people talk about this, but the Federal Reserve stress tests were so expensive for small and medium-sized banks in terms of the amount of staff they had to bring on to for compliance and to comply with the stress tests. It caused small and mid-sized banks to do quite a bit of very risky commercial real estate lending. And as a result, we're going to find out, and again, think of the idea of time compression, we're going to find out quicker than we normally would if there are really bad real estate loans that have been made. And again, the Fed has already, it would not surprise me at all to see the Fed come in and rescue this pocket of the financial market as well, because you've got commercial mortgage-backed securities running around out there that are also backed by things such as retailers that will never come back. So this is a many-tentacled monster that we're seeing because the Federal Reserve did everything in its power to inflate the bubble for longer than it had to be inflated because it was so petrified of the stock market going down and so petrified of credit volatility being unleashed.
I follow Christopher Whalen's work. He's a bank analyst and also for mortgage finance industry. And he said he's written extensive blog articles about how the Congress coronavirus bailouts, they left the commercial real estate, also left the restaurants, according to Jim Chanos, out of all the bailouts. So they're going to have to go back and change the rules. But like you said, I think they're going to have to change the rules a lot. I think the rules changes, I've called it fast and furious rules changes that are coming. They're going to have to change that with the commercial real estate mortgage-backed securities because, people aren't paying their mortgages. They're not, for commercial, they're not paying rent. Those are defaults. So they're going to have to change the rules that they're not going to be defaults, right?
You said fast and furious, and we're finding out very quickly the extent to which we're going to see bailouts and the extent to which we're going to see the rules changed so that you can accommodate effectively insolvent institutions. But again, I go back to the question of, if some of these businesses never come back, who exactly is left holding the bag? I mean, you can't bail out an entity that doesn't exist.
Yeah. Also, where are the Americans that were working those jobs? What jobs are they going to get? That's another big problem.
It is. And I am concerned that we now have 44 states in the United States with 500 or more coronavirus cases. We are seeing Americans come out and be more mobile than what they've been directed to be. So there's a grave risk that we could see the coronavirus persist and prolong for longer than what needs to be the case. And that means that you are indeed talking about one of the consequences being long-term unemployment.
So I know you've lived in Texas a long time. You're a Texas girl at heart. I want to ask you about the oil market. It's been unbelievable. I've never seen anything like it in my life. It's a perfect storm of bearish oil market news. There's been unbelievable demand destruction in the oil market. I've seen estimates from 27 million barrels per day to 30 million barrels per day demand destruction coming by the end of April and early May. So hopefully those are not accurate, but it looks like they might end up being. I've just also seen articles about tens of thousands of people in Texas and Oklahoma losing their jobs. How bad are things there in Texas with the oil market?
Things are pretty bad here in Texas. And again, the backlogs in the state's not able to handle the sheer volume of claimants who are trying to crowd into the system. So if you can imagine, this is the worst of all worlds. Texas is also the largest the largest exporting state in the nation. And the situation with Mexico falling into a very deep recession very quickly is yet another nail in the coffin of the Texas economy. And tack on the crash in oil prices on top of that, and the fact that Texas is also a massive services economy, and it's the worst you can possibly imagine.
It seems as of now, there's not going to be any bailouts for the shale oil producers. They're trying to do this global production cut, but for 10 million barrels a day, where there's all this coordination between the Saudis, Russia, OPEC Plus, and the US, maybe I think Mexico reluctantly joined for whatever leverage the U.S. had to put to get them into the deal. But I don't think the cuts are going to be enough.
Well, we're seeing demand destruction, the likes of which we've never seen. And the coronavirus is fairly new in emerging markets. So we haven't necessarily seen the cresting, if you will, of the demand destruction for oil.
Yeah, also, I think the real estate in some of those Texas markets like Dallas metro area, Houston metro area, there's going to be spillover because so many people are going to be losing their jobs.
It's entirely possible. You have to bear in mind one of the largest employers in the city of Dallas, for example, is J.C. Penney.
I didn't know that. I know Neiman Marcus is from Dallas, right?
Neiman Marcus is in Dallas as well, and obviously their finances are just in the tank.
Yeah, I would imagine some of those upper level oil executives don't have as much discretionary income to go buy things there.
Look, it's absolutely that's absolutely true, and I think that we're going to see a shift, at least for some Americans, that is similar to what we saw in the aftermath of the Great Depression, when America became a much more frugal country as a result of so many households realizing the importance of having rainy day funds set aside. It is a reality. It is a sad reality that so many didn't have money set aside, and I'm not even necessarily speaking about people who make $50,000 and less. I saw a great analysis came out of, I believe it was Morgan Stanley, I may be misstating, that the vast majority of employees who are collecting unemployment insurance in the second quarter, because we know that that's how long unemployment insurance is going to last, that they will make more than they would have made at their prior jobs that they lost because of the additional $600 per week that's being paid out because of the stimulus plan. But I'm not referring to people who are actually going to be better off financially, including what's in the stimulus package. I'm speaking about the 38% of people who make $100,000 a year who had no savings set aside going into this. This is going to be a middle class issue as well when it comes to how much households will be harmed. And I think the long-term implications for the economy is that we will start to save more as a nation, and that is going to have a dragging effect, if you will, on consumption in a nation that has traditionally been 2/3 consumption.
Well, I'm not sure it's a good idea. I don't think it's a good idea at all, actually, to save in some of these currencies with what the central banks are planning on doing. Gold, I think gold's probably the timeline for $2,000 an ounce gold has moved up a lot.
Well, certainly. And that, initially I think gold was harmed because there were a lot of margin calls and people were trying to access liquidity where they could in their broad portfolios. And there was a lot of speculation that had also gone into gold. So there was short covering as well. But that is certainly going to be a safe haven and a hedge in this sea of economic and financial destruction that we're in.
Yeah, I think there's going to be a lot of volatility in the stock market. There's people that think that just because the central banks are increasing their balance sheets, that guarantees Dow 30,000 again, 35, Dow 40. But I'm not as confident about that. I think there's going to be a lot of chop, a lot of volatility up and down along the way. And the average person, it's going to give them a headache looking at it.
Yes, I think that the volatility in the stock market has not ended. And again, we've probably got one more massive up leg when the Fed announces that it's going to be buying stocks. But I would have to ask the question, what's going to happen after that?
I think people might lose confidence in the dollar, Danielle. I think, if once the Fed announces that, if the stock market does go up, I think gold will go up more.
It's entirely conceivable. And you have to remember to point out to your listeners that gold has also outperformed during deflationary times.
Yeah, I totally agree. I think gold historically, it does better with currency instability when people stop trusting governments. So inflation, deflation, stagflation, a lot of volatility, that tends to benefit gold from my research.
Absolutely. Again, it's the ultimate hedge for a reason, and you need the ultimate hedge when you have peak volatility and when you have peak destruction.
Yeah, because we have central bankers trying to counteract deflation, right? So I think it's pretty clear that we have a lot of dollar denominated debt outside the US that is defaulting. Some of these dollar liabilities, these forward dollar swaps that the Bank of International Settlements was worrying about in December, they spent almost 30 pages on a 150-page report warning about these dollar derivatives, the forward dollar swaps. So I think those are defaulting. So we do have some debt destruction, but then the central bankers are trying to counteract that.
They are. Again, they're trying to do everything that it takes, but in the process, the very tenets of capitalism are being destroyed. I mean, one of the basic underlying tenets of capitalism is free markets, and that's certainly not the direction we're headed in.
Oh, definitely not, especially if the federal government starts taking large equity positions again.
Yeah, some part of me is happy that we've got a long weekend in front of us because these things are just so hard to think about.
Well, the oil market already crashed again last night, dropped 9%. So I'm not optimistic about what's going to happen next week.
You know, you never know what's to come. And if United States agrees somehow to production cut, which is illegal because oil is not a state-run entity, but certainly the state of Texas, the CEO of ExxonMobil has already come out and said one way or another, production is going to get cut. But again, it's a matter of whether or not the demand destruction is going to more than offset the production cuts or not.
Yeah, that's exactly what I've been thinking. I think right now the demand destruction is still overwhelming, but we are seeing the rig count starting to fall. We are seeing the refiners stop producing gasoline and clear inventory. So we are seeing some good signs, but I think it's slower than the demand destruction is still so overwhelming. This is a record. I've never seen anything like it. The oil demand in India, I've seen reports that it's down 70%. It's nuts.
It really is. And again, we haven't seen COVID really hit the emerging markets, and those are also great consumers of oil.
Exactly. That's where all the growth is. All the oil demand growth has come from China and emerging markets for the last couple decades.
Absolutely.
Okay, so as we wrap it up, I have one more question. I know you've talked a lot about the pension funds. I feel really bad for the investors in the pension funds, not for the pension fund managers or the pension fund investment boards, but for the people who do save and they work hard and they put their money into their retirement account and they think that, okay, I'm going to get some decent investing returns. But it seems that the pension funds, Danielle, are always the suckers. They always get screwed, whether it's the shale oil junk bonds or the shale oil equity for some of these shale oil producers that are going to be, there's one large bankruptcy already with Whiting Petroleum. I suspect there will be a lot more. So what do you think is going to be done about the pension funds?
It's so hard to say. You know, pension funds unfortunately have plowed into private equity in recent years. They don't understand how very illiquid they're going to be. The pension fund situation is just such a morass. There's so much corruption, and yet there are victims. There are true victims, teachers who've taught their entire lives and they're counting on that for their retirement. And it is still against the Constitution of the United States to bail out an entire state if such a thing was to be necessary with, Illinois. So there are, again, the right word to use here is victims.
Yeah, I would agree. And that's why financial education is so important. You do a good job with that. I try to do a good job with that. You write very clear and concise, easy to understand articles about what's happening in the economy. One more question here that I forget was student loan debt. So President Trump said that student loan payments as of now are suspended 6 months. Do you think that if the dollar were to strengthen, do you think the Fed would be willing to go and cancel out student loan debt to try to devalue the dollar?
Gosh, I mean, that's something that I've really never even thought about. It's certainly possible, but when you consider the fact that the first stimulus bill was 2.2 trillion and that the Fed is going to be levering up the 450 billion that comes its way to 4.5 trillion. I mean, if you're talking about 1.6 trillion, it's a drop in the bucket, relatively speaking.
Yeah, I really think that the Treasury and the Federal Reserve and President Trump, because he tweets about the dollar all the time. He's tweeted so many times about the dollar, I've lost count of it. But I think if the dollar index were to head back above 103 again, I think the Fed would literally be willing to throw almost anything, including the kitchen sink and the kitchen soup. That's an inside joke for my podcast listeners. When I made a mistake, I accidentally said the kitchen soup instead of the kitchen sink. They would be willing to throw almost anything to create currency, buy up assets, and to try to get the dollar where it doesn't rally anymore.
You know, nothing surprises me. And that's saying something. So I never thought that we would venture into this uncharted territory as the United States of America, and yet here we are.
Well, I think all the major governments are in this mess now too. You look at what Japan has been doing with their QE and stimulus now. They've been doing it longer than anyone else, but they just increased it more. The European Central Bank just increased it more. So China seems unwilling to do that, but I hear that they have pretty bad stagflation in food and rent there, and plus their real economy is not functioning well. So I don't see them doing what they did in 2009, where they did that unbelievably large stimulus package. If they were to do that, especially because their export business is not working that well right now.
That's absolutely correct. The flexibility globally is not what it once was, because we have the World Trade Organization has cited that this is going to be the worst year for world trade since the Great Depression. I mean, there's very it really does hamstring your ability to provide relief in such an environment.
If I could summarize a lot of what we discussed here, there's a lot of bailouts and a lot of rules changes. And you're a very successful, hardworking financial professional. I know how many hours you spend doing this basically every single day. How many rules changes have we seen just in the last 4 or 5 weeks?
Rules changes, I can't tell you, but at last count, we have seen, I want to say upwards of 40 emergency measures out of the Fed. So I'm not keeping count of every organization out there, but I am following the Fed very closely.
Wow. And that's just what we know about. I think it's going to get worse before it gets better. If the real economy were to somehow miraculously restart in a month or two, those cash flows would come back into the state and local economies. That would maybe help things, but we'll see.
That is right. We will see. And that would be a best case scenario. And best case scenario means mitigating the loss of life. And that's what we all want the most.
I want to thank you very much for your time today, Danielle. If my listeners want to follow your excellent work, how do they do so?
They should follow me on Twitter at DiMartinoBooth. And please, I invite you to come to quillintelligence.com. We've got the best research on the street by far, and it is also dirt cheap, our daily feather. So please go and subscribe, and you can follow me every day the market's open.
Yeah, I've heard a lot of financial professionals like Jeff Gunlock and others highly recommend your work.
Well, that's very kind of them. I look at that as being validation of all this crazy hard work.
Thank you very much for your time, and I look forward to speaking to you again soon.
Thank you. Be safe.